Good evening. It's January 14th, 2009, and I want to talk about two topics today. One is people have been commenting in my section about how silver is not more rare than gold, and I'd like to point out that it is more rare than gold in deliverable form for the market to take home or to store in any kind of vaults or anything like that. Now, some people have commented in that section and stated that they believe that there's plenty of silver, or because it's on eBay or something like that, they can see lots of silver there. Now, the problem is that there isn't enough above ground silver in deliverable form to meet everyone's demand. If a large enough people started buying it, it would have huge shortages at the current price, so that price would have to go up. I posted a link of 3 reputable silver investors who are Jason Hommel, Ted Butler, and David Morgan. If you click more info, you can see the link there. All 3 of them agree that silver is more rare than gold, and all 3 of them have provided information on that where they get their data. They get their data from the CPM group and the Silver Institute. So, based on those 3 individuals and their sources of data, it's clear that there isn't enough silver for everyone if there was a huge rush to silver. Physical silver, that is. There's plenty of paper silver there. Now, my second topic is about the February bond collapse of United States Treasuries. Now, everything has come to crescendo. There's so much data to provided that state that the first week of February will be a complete disaster. The Treasury bonds will collapse. Interest rates will go up, and the government won't be able to fund all its projects, or will basically not be able to borrow the money. So consider, like, if the government had to pay 20% on its loans, that's on $10 trillion. That's just $2 trillion a year. That's a huge line item for the government to dole out. That's probably more. That's more than anything that they would have as a budget line item. So their choices are very limited. If they print the money, that's hyperinflationary, and I see no way out of this. Now, some of the data that shows that this is going to be the first week of February is that bonds have created a head and shoulders pattern. What that is a trading pattern where there's a peak, then a really high peak, then it comes back down, peaks up again, and those 2 peaks on the side are the shoulders, and the peak in the middle is the head. The bonds have created that head and shoulders pattern, and whenever that occurs, shortly afterwards there's a collapse. An example of that is the dollar collapse that happened last month, in the beginning of last month. Also, municipalities and states are completely broke. They're going to be running a deficit. This is not abnormal. Lots of states and municipalities do run deficits. However, in this current climate where debt is hard to come by, or borrowing money is hard to come by, even for cities and states, they will be looking towards the federal government, and which would help precipitate the collapse, as investors who've purchased the bonds in a hopes to sell it to the Federal Reserve, who has promised to buy the bonds, who have not promised but have stated openly to buy the bonds, are going to be dumping them in that time frame as well. So clearly, who would want to stay in a 30-year Treasury note at 3%? It just doesn't make any sense. So I don't know what the government's going to do. It's going to be a disaster if they don't have a plan. They most likely do, and I don't know what it is. But I do know one thing for sure, is that this bond collapse is going to happen, and what the end result of it, I don't know. But I do know that also that silver and gold will have to collapse, because they've told people that, hey, you know what, go buy a bond because it's safe. And if the bond collapses, that means you've lost your principal, because in order to sell it, you have to reduce the amount of money that you get back as principal in order to cover the interest rates that are now requested by the bond. So we'd have a lot of people upset and wanting to recover with the remaining money that they have in some sort of asset other than the US dollar, and that would be gold and silver. However, if you push it down, most people do not chase items that are going down in value. They chase items that are going up. So if it's not going up, they're not going to buy it, and so I see the banks destroying gold and silver to time with the bond collapse. Also, another trading statistic, the MACDs and the and other stats are showing that both gold and silver are heading in a downward range, and same with the Treasury bonds. They're heading in a downward range and headed towards a complete collapse. So again, I'm going to post all that data up there, so take a look at it if you want, and that's it for tonight.